And welcome everyone back from lunch. I know it is an incredibly tough task to get you all back into swings after such a delightful hour and a half out of the room. I'm sure you're all happy to be back in the temperate climate we have in here. First of all, thanks to Jose for hosting. Thank you, Iker, for inviting me back to Cartagena, to this conference and to this very room. And of course, thank you to Antonio and to the rest of the FLAR team for facilitating today's conference. And of course, it's a delight and a pleasure to be back. My name is Søren Elbech. I am Global Head of Supranational Institutions at JP Morgan, which means I oversee the bank's coverage effort of supranational institutions, which is like multilateral development banks, international organizations that are like treaty-based, across all products and across the globe. I'm based in New York, so I spend most of my time with clients that are based in Washington, and then I partner with regional coverage bankers for those who are based in other regions. So in the case of FLAR, I cover, which falls under my remit. I partner with Eugenio Alarcon, who sits in the office down here, a colleague of mine, who also then covers the other Latin American-based supranationals. I have the pleasure today of talking about something that is extremely dear to my heart, that is that the future is now. And of course, it is a tongue-in-cheek moniker, which I think we're going to hear a lot about from this distinguished panel I have. Before joining JP Morgan, I basically spent 25 years inside these multilateral development banks, supranational institutions myself, working in their treasury units. And I have myself been involved in various IT projects. Notably one I would mention is one when I, about 15 plus years ago, worked for the Norwegian Export Credit Bank. I arranged and basically designed and implemented an electronic platform called e-funding, which allowed export finance, as the institution was called, to tap predominantly the Japanese market for structured MTNs. And what I did was I basically moved an offline process online and allowed banks to log in, put together the details of a transaction they want to do for us, take pricing, take a mandate, and ultimately transact with us, create automated documentation, create the set of information that was needed to get information into our treasury system, our accounting system, and so on. Also allowed our counterparty banks to do the same. It also, as I said, created automated documentation, both for the bond issue as well as for the swap confirmation. And I'm going to remind you all that this is 2004 to 2006 I did this, so way ahead of what exists today of technology and so on. I encountered so many issues along the way of how transactions are done deep down into the details and so on, which is something we're going to hear a lot about in the next hour. What astounds me is that today, this process that I was so ingrained with back then is by and large still the same process today. And when I looked at it 15 years ago, it was also the same process that has existed for a long time. So all efforts that have been done over the years to change fundamentally the process of how bond issues are done have been evolutionary, not so revolutionary. And this is where I link to the futures now, because I think what you're going to hear about now is initiatives that are being done by institutions like Agora, by European Investment Bank, and by Tradeweb to change the market as we know it, the processes as we know it, fundamentally, and how that's going to influence you, and what, of course, we need for partnerships in that regard. So with me today, the panel here is, as I mentioned, super distinguished. I'm going to ask each of them to introduce themselves and introduce the institution and what they're working on. It's about a 10-15 minute, we call it like bilateral fireside chat, where they will present, I'll ask some questions. And then after that, do put it all together, combine the connect the dots. Then, of course, want to hear from you all the questions and answers that you may have come up with. So to my left, to your right, Charlie Berman, who is the co-founder of Agora, DCM or Agora, I think just the name, and he will now introduce himself. I want to say that Charlie's a legend. When I, many years ago, started doing the global bond format at the Inter-American Development Bank, it existed and it was there and I could make use of it. Charlie was at its creation. He was one of those who were there when this was something that was put together. So Charlie has been in capital markets working on transactions basically for the last, I'm not going to say it, Charlie, but 35 years, and which means that he can actually talk about this with a lot of authority about how to actually change this. To my right is Iseult. Iseult works for Tradeweb, where she is working on innovations into the trading capabilities of how markets function, and you're going to learn a lot about the status, but also trends of what's going on in electronification or trading. And last but not least, to her right is Éric Lamarcq, who is Deputy Director General of Finance at the European Investment Bank in Luxembourg. And Éric, of course, is a veteran at this conference, so you probably, many of you met him before. And Éric is going to talk to us about how the European Investment Bank uses blockchain to do digital bond issues. But first, Charlie.
Søren, thank you very, very much indeed. Mr. President, Iska, Antonio, thank you very much for having
Agora
me
is
at
building
your...
a unique end-to-end digital platform powered by smart contracts and distributed ledger technology.
Sorry, that was slightly premature. Again, thank you for having me here. I'm conscious of who this audience is, and there are actually a smattering of institutions that I would regard as old clients, new clients amongst the supranationals. So welcome everybody. Glad to be here. But a whole bunch of you who have no idea who I am. And I suppose the first thing I should say, given that Søren started on it, I'm essentially was a banker for a very long time. 4 years ago, I left banking, and I set out to bring about the changes. I basically stole all of Søren's ideas that he had when he was at Export Finance about making the market more automatic, improving processes, cutting times, increasing efficiencies. These were all the things that many of us in the banking industry had wanted to bring about for a very long time. And the reason I'm here today is that during the last 10 years, technologies have been developed which make the blueprint that Søren and his colleagues set about creating all those years ago, enabled us to make it a reality. So I want to start by showing you a very short animation that my colleagues and I put together actually about a year ago now to very quickly explain what we're doing at Agora. And after I've shown you that, then I will go into a bit more detail. So if you could roll the video, please.
Platform powered by smart contracts and distributed ledger technology to revolutionize the fixed income market. Global bond markets are vast, with a record $9.7 trillion of bonds and other debt issued in 2020. Despite technological advances, many processes have not really changed. The bond life cycle still comprises a multitude of work streams that have traditionally been split into separate silos, creating inefficient workflows and data segregation between multiple participants in the fixed income value chain. The Agora platform uses smart contracts and distributed ledger technology to seamlessly connect these silos, allowing existing market participants to communicate and share information on a confidential and permissioned basis. Agora Smart Securities are the future of fixed income, operating in a single, synchronized digital environment, eliminating costly data reconciliation and duplicative processes. They are not a new asset class, but are a digital representation of bonds as they exist today in compliance with existing market, legal, and regulatory practices. They move beyond existing securities by utilizing smart contracts to automate functionality. By embedding not only the static data, but also the logic to interpret the data, Agora Smart Securities will perform many planned lifecycle events, increasing straight-through processing rates. Agora's vision is to benefit the fixed income market by synchronizing users to data and logic, thereby minimizing complexity, increasing efficiency, and enhancing collaboration. Agora, market evolution for all.
So, in that animation, we use the term smart contracts, DLT, a lot, and I think that is part of the in presenting these ideas. Part of the problem is starting with talk of blockchain and those other elements. The underlying technology is less important. What is important is what is the purpose? What is the result that we can achieve by changing things? And the part of the challenge in changing the way we do things is that the markets aren't broken. The markets function very, very well. It's just that they could function a lot better. And everybody who is working in this space is looking towards how do we improve on what we do today? How do we cut costs? How do we get away from repetitive processes where we are inputting and re-inputting the same data time and time again, and doing it within different data silos? So many of you in this room are either issuers of securities, but in the main, you're buyers of those securities. And the process through which you conduct that involves a long chain between the issue of service providers, between the issuer and the investor. We have the investment banks, we have the issuing and paying agents, the custodians, the CSDs, lawyers, all of these people. And the challenge that we have is how do we get people off from using Word documents and PDFs and emails which constantly require synchronization and reconciliation of that data time and time again. So the purpose of what we're doing at Agora is not so much to introduce new digital securities. That is something that will come in time, but rather it is to address the current processes for highly regulated markets to improve the rails and the pipes that are used.
Charlie, can I ask you a question?
Yes, of course.
So what you're talking about right now sounds eerily similar to what I was facing.
I told you I stole your ideas.
Exactly, indeed. Either I was not very good at implementing a solution for this, because this is the exact same conversation,
yes,
exact same words that you're using that I was facing in 2004 and 5 and 6 when I built this e-funding platform. So why is this time different? I mean, if we couldn't solve it then, why can we solve it now? Or is someone else going to sit here 15 years from now and then talk about these very issues again?
I think the answer to that is quite straightforward, but it does mean that I have to talk a little bit about technology, which, and I'm not a technologist, I'm a banker. So I've had to learn a lot about what is possible and what is practical in the last 4 years. It is, when I first started to get interested and I heard about distributed ledgers, I didn't understand any of it. When I started to dig deeper, there were some simple elements which resonated with me very strongly. In the world that I came from, as a banker, you have to have a lot of bilateral, confidential conversations with your clients, many of them. So this is Zoran's job now. He used to be on the other side of the table, where you are giving your best ideas and your thoughts to issuer A, and then you have issuer B, and the ideas may be similar, but you need to keep those conversations very clearly separate, and for everybody to understand that that is a bilateral, confidential conversation. Now, for issuers, there's particularly the big frequent issuers, there's a challenge here. They get very well served by their banks, typically. I don't know, maybe, I don't know if you agree, Manuel, if that's the case. But they receive that information in a very unstructured way. Some of it may be coming with an email, which might have a PowerPoint attached to it, might have a Word document or a PDF. And they're ingesting lots of information, could be a Bloomberg message, which they then have to collate to compare and contrast the various opportunities that they have. Now, when I discovered the world of DLT, and I discovered in particular a particular type of DLT which was confidential and permissioned, I understood that we could conduct those private conversations between two parties very securely in that environment. But the really clever thing about DLT is at the point when an issuer decides it wants to do a deal, it needs to move from that bilateral confidential environment into a multilateral and shared one where all the parties can look at the same information at the same time, look at a single screen, a single place where everybody is viewing the same information, and agree things, change things, until you get to the deal that you all agree on doing. And at that point, you then need to be able to send that information to other people in the chain of service providers who make a bond happen. So, for example, Izzy is representing one of the most important trading venues on the globe. They need to receive precise information as soon as it's possible. Now, today, that information goes to something like Tradeweb on a printed document or an emailed PDF or a Word document, which then needs to be manually inputted into a system or machine read into that system. That's not a very efficient way of doing things. The same process is happening when that information needs to get to the CSD, the Central Securities Depository, where those bonds come into existence. Now today, that information is transferred in a very manual way. And the same is the case with the custodians, the people that hold your bonds. Wouldn't it be better if everybody was receiving that information as structured data, and they know it's all coming from the same golden source, so that everybody involved in the process is receiving that information without the need to manually input it, and you know that all your other service providers have exactly the same data entered into their systems. So we're not talking about one environment where everything happens. We need to have an environment in which the internal systems of each of the entities are respected, but that they are all using the same information. Now, distributed ledgers provide that opportunity. And the other really interesting aspect about this is that we are looking at the very notion of what a security is. So today, a security is totally dumb. It used to be very dumb in the old days because it was a printed piece of paper which would exist and be distributed to all the holders. And they would hold a physical certificate, whether that was in a bank vault or under their bed. Now, the first big change 50, 60 years ago was that those printed documents were immobilized. So instead of being distributed, they were all held in one central place. And then probably about 50 years ago, someone said, well, okay, if we're holding them all in one place, why do we need the certificates? Let's dematerialize that. And so those bonds, instead of becoming printed certificates, became entries on an electronic ledger within a central securities depository. Since that incredibly important step, nothing's changed. We still basically now have the same processes, the same pipework that we had 40, 50 years ago. All that we're doing today and all that we're proposing is to bring those processes into the 21st century by saying that instead of everyone having a separate record of that security, that instrument, that trade, let's share that information and all work off the same source. If we're all using ledgers, we can also do something very important. We can take that inanimate, dumb financial instrument and we can make it smart. And what do I mean by that? I mean that we can feed it information. So for example, if it's a floating rate instrument, we can give that representation of that instrument what its floating rate index is, and it can calculate what its new coupon is. Take that a step further. Say if somebody wants to do a tap on an existing issue, something that Eric's team do all the time. How do we know that everybody is immediately notified that the size of that bond has now increased in size? If we make that security smart, we can feed that information into it. The reverse is true. If in the corporate market, or if we buy back a bond, how do you, as issuers, get in touch with you as the holders? That's a very complicated process. It needs a message going through custodians or with notices being published in newspapers. How much?
Sorry. What is the value proposition?
The value proposition is that where we're heading, we cut down on errors. We cut down because we don't have manual inputting and re-inputting. We cut down on the need to synchronize and constantly reconcile everything. And ultimately, we get to the really sexy part, which is that we can cut settlement times from 2 days or whatever they are today. We can cut them to 0. Now, why does that matter? It doesn't necessarily. Why is that an important thing? It means that if we can get to that state, we can also tokenize the payment for those transactions and the legal transfer of those securities, and we can have that absolutely synchronized so there is no gap between those two events. Now today, the reason we have settlement times is that people need to make sure that money is in accounts and that title is being transferred. If we have a means for making sure that those two events can never happen unless completely synchronized, we substantially reduce counterparty risk. We eliminate it. We cut down the failure to deliver risk. All of these events which require people, everybody in the system, to hold additional capital. There are literally tens, probably hundreds of billions of capital wrapped up in our system because we do things in the same way that we did them 50 years ago that is just dead. It's a burden on everybody. So I think the value proposition is more efficiency, lower cost.
And thank you for this, because I think that is super important as we now move on to the other panelists, is to understand that there is actually a lot of value trapped in the existing processes, and what are as you have Agora working on the foundation of the market, on foundation of the process to change that, the plumbing as I call it, they're changing the plumbing. What are the people who then work on different parts of the plumbing, what are they actually doing to unlock that value that is trapped? And next I want to invite Éric to talk to us about EIB and its digital bond issuance on blockchain. Maybe introduce yourself first, and then.
Thank you, Søren. My first remark was indeed, so audience may be surprised that apart from Iseult, you have invited all dinosaurs in order to speak about high tech.
Talk about yourself here.
We will try to make it interesting, but I think that Charlie has set the scene. I think that it's very important to have a very sound banker background in order to know from where we are coming from and what do we want to achieve. And what is the value in that? I could give you a couple of examples, so I'm already deviating from what I should present. But one simple example. EIB has currently, okay, I should have started with myself, Éric Lamarcq, Global Head of Capital Market and Funding, Treasury, everything, all the front offices of EIB. Back to my example. We've been confronted with ruble payments. EIB has still 2 outstanding bonds in ruble, with all the settlement issues and all the difficulties that we've seen since February. So we decided last week to buy back some of those bonds. And then indeed, you start with a simple problem. You may have identified with some of your big counterparts where are the big pockets of holders of your bonds, but you will never be sure to attract and to get the full bond. And then you go through a public offer, and you are passive, you pray, and you hope that every morning you will have some clients in your nets. So tomorrow, and indeed based on the new technology, and then I will focus on what we've done so far, we expect that, and again, coming from a public institution, all this technology, well used, is of public interest. Not only we will be able to save a lot of cost along the road, but we indeed secure, as you defined, Charlie, a lot of the operational risks that we are facing. Clearly, the payment versus delivery is one of the key topics. From my treasurer's hat, I could tell you that it may also help me to better manage my liquidity and possibly better secure my intraday liquidity risk. So the more you are focusing on what we can achieve, it's a very big topic. But I propose to start a little bit on a very pragmatic way on what we've done so far. Okay, setup. So EIB, yes, we like to be on the forefront of some innovations. We started 15 years ago with the climate awareness bonds without knowing that this will develop in such a market. We were about the front runners for all the IBORs and new rates. And indeed, we embarked in a few years ago in the blockchain and digitalization of bonds. Here again, for me, a digital bond or a token bond is not a new asset class. Sometimes I hear that it's a new asset class. I'm sorry, I can debate on that during the next coffee pause, but nobody will embark me on that story. So, public institution, we consider that EIB, due to its big size, big funding program, we issue always between 50 and 80 billion euros bonds every year, that we can put our structure available for banks or partners who would like to test in real life their concept. And we do so if indeed it makes sense from a public interest point of view. And in particular case that we will discuss now on the short bonds, 1 million euro, because again, we don't want to expose ourselves to big amounts of money, 2 years, very limited also in terms of duration. We embark with some lead managers, and particularly also with a central bank, Banque de France in that case, in order to integrate and to validate the CBDC, so central bank digital currency. Our aim was to really test something which goes above the simple testing with one entity and other entity. So, what are we discussing about? We wanted to have non-affiliated investors, And I will come back about that because then we discovered at the end of or during the life of the bonds some interesting points. We wanted to have and to use a public blockchain, again, to be very pragmatic, something which is already available, a public blockchain. And an important point, we wanted also to test the secondary market. Again, when you are working in a laboratory, it's relatively easy to do one deal, and a lot of deals have been done just by the issuance. But we wanted even to go further on the secondary market. And this is the simplified structures of the transactions that you have here with the different partners engaged here. So key actors of the transaction. So you have the broker and the dealer, so the one who will be issuing if you want. You have the platform, because you need indeed a platform which provides the systems. We need a blockchain. The public blockchain used was Ethereum. We need a registrar and a settlement agent. And we go. So I'm sorry, though it's less dynamic than what Charlie proposed. But just make it very simple. So you have the investor who deposits the euro with the broker and dealer. Then you have a central bank, Banque de France in that case, creating the digital currency, which is put available to the broker-dealer in the form of a wallet, being a security wallet. And on the same side, on the same time, you have investors which need also an investor wallet. So at a certain time, you leave the cash transaction. When you go into digital currencies, we are discussing about wallets. And in that case, but you see that the rest of the picture is very clear. When you have the structure in place, when everything has been digitalized, everybody, so the issuer has an account, the investors have an account, and the money does not exist anymore in terms of transfer, it's digital currency. Then you can indeed proceed with a transfer, immediate transfer of the tokenized bonds with, same time, an exchange of digital currency. Then you leave the bubble, the circle. It goes through Banque de France who makes the compensation. The digital currency is being destroyed. And that was. This was the environment that we wanted to test here.
Eric, can I ask, how did the broker-dealers convert the euro deposited to the CBDC? How that, you say there's a broker-dealer CBDC wallet. That happened at Banque de France?
Yeah.
And did the broker-dealers transfer their cash to an account with the Banque de France?
Yeah. Indeed. Indeed. And it was a job of the central bank to turn, when they have their deposits, they have turned and transformed everything in the digital currency.
They're tokenized.
Tokenized. The wallet had been created, and everything was allocated.
Can you talk about the timeline of this? I mean, what was the, how instantaneous was this? How quickly did this go? I mean, there's a chart, right? And it took you 2 minutes to go through the chart. Was this as fast as it took to do the bond?
We wanted to have it within 1 second. This was the dream. In fact, it lasted a couple of minutes in order to have all the deal being performed. So we could not achieve this instantaneous aim to have everything because all the pipelines, everything was a little bit new. So it was indeed a couple of minutes, so we could not definitively kill the operational risks we wanted to kill behind that. But we were almost there. Here, again, when you are looking at those kind of things, my comment, general comment, it looks very easy, very simple. But this is concrete. What you don't see here, and what people and bankers and let's say all the actors in this market do not see, is that the major work, apart from the technological work to be done in the different system and platform, for me, at my level, at our level, the biggest burden is the legal background. You have no idea how heavy it is to think about the full legal background which is behind that. Because in fact, even if we start from the existing processes that we master, jumping into a new area like that where you skip even some of the steps means that you really have to rethink the full scheme in terms of legal entities. One clear example was when we've seen, so we've done the transaction, but we wanted also to see some animation on the secondary market in order to be sure that even after the tokenization of the bonds, people were able to trade. And one stupid things that we did not imagine at the very first beginning is that when new investors are willing to buy your paper on the secondary market, they need first to have a wallet just with the Banque de France. And in order to have a wallet, to settle the wallet, you have to pay fees. But from a legal perspective, nobody was keen, and nobody was even authorized in the market participants to pay in advance for something which has not been done. So we lost a certain time, and we had really to review all the schemes with the lawyers, and we were not able to solve it. How can you pay in advance for a service which has not been delivered? It's not standard. So we circumvented it, but we had also to change the documentation of the bonds in order for the broker-dealer, let's say, to pay in advance the cost of new investors and charge it when they were buying the bonds. It sounds very stupid, but you have indeed no clue of the kind of details we need to go through in order to have this kind of platform and transaction relatively watertight.
Eric, there are obviously many central bank investors in the room here and other official institutions. So knowing this audience is here and therefore potential buyers of paper and users of central bank digital currency, the lessons learned, in terms of participation from central banks, participation means you had the Banque de France, of course, but investor take up of this. It was a relatively small issue. It's repaid 6 months from today, I presume, I think. Can you talk a little bit about investor engagement and how did you get investors to get to this?
Clearly, okay, this is a test. The test clearly shows and validates what Charlie's told for investors, and so the transaction costs are dramatically reduced. The risks of any kind of settlement have been deleted. This was very efficient. All the double checks, everything which lasts and take a lot of time has been deleted. Lessons learned means that indeed having a public area where you have a multi-dealer issuance as we did, but let's say you have an area where all the dealers will be there, then you have this new market. But we are not there. We are not there because we are still in an environment of immature technologies. You still have many different opportunities and platforms. We are not in a unified world. We are not there, and it will last still a couple of years, not decades, but years, until we have a common platform. But it works. It works, meaning you can be a couple of dealers there, so we limited to 3 dealers, but could have invited more. You can have investors buying on the primary market. You can add investors being active on the secondary market. And everybody has indeed the same instantaneous information. For us, as an issuer, I see also a big advantage. I come back to my buyback, as you were mentioning. For us issuers, we will be able to know who is holding our bonds. If you need to discuss a buyback or whatever, you have a very good understanding on where your bonds are being located. But also, you have a very good understanding for a big issuer of how dynamic is your secondary market. How often are your bonds traded? What kind of bonds are traded? And it helps us also to take care about the shape of a secondary market. So again, when you start thinking about all the different advantages that all participants may gain, we are just at the beginning of the journey.
And I think that's a perfect segue to Iseult and Tradeweb, because I think you start out by saying, Éric, that once you had gotten to do the bond, you started thinking about the secondary market. And you say this is now about knowing who holds your bonds. This is an incredible critical portion of you knowing what to do next if you want to, how to do liability management, for instance. And I think that is really the future is now. The future is already here. And Iseult, maybe you want to talk to us about how Tradeweb participates in the innovation and some trends you're seeing.
Yeah, absolutely. I guess I have to use the mic. Sorry that mine's not working. First off, I thought we were only going to talk for 10 minutes, so you guys all lied to me, so that's very fun. I feel like we're going over, so I'll try and be much faster for my presentation. But just listening to everyone on sort of the panel, the themes that sort of emerge for me, tell me what you guys think as well, but it's very much about technology and efficiency. And I want to sort of introduce Tradeweb and introduce myself and discuss kind of what we're doing in that secondary market trading, as you mentioned. But let's see if this works. And I'll get a little bit into market structure as well. No, see if you can push forward. Maybe we'll do without the slides. No? It's okay, I can do it without them, but well, hopefully they'll figure it out by this time. Just for background of what Tradeweb is, because actually as I've talked to many of you, not many people, there we go, know what Tradeweb is, but we were sort of created in 1996 with only 8 million in capital, and then today we're a public company traded on the NASDAQ. We have a 12.5, maybe after earnings today, 13 billion market cap, and we're this premier electronic marketplace for trading fixed income securities, credit, as well as some equities and ETFs. And I think it's quite interesting, actually, before I go into the electronification concept, just for some background on my career, because I think it's a nice analogy for how technology and electronification has taken hold and how that's evolving market structure and why Tradeweb is important and why Tradeweb can be important to your institutions. So for background, my background is not in emerging markets, it's not in rates, it's actually in credit. So I worked for over 10 years for a very small asset manager you've probably heard of called BlackRock. I traded investment-grade corporate bonds at BlackRock for a really long time. I may look young, but I'm not that young. And I loved trading. I loved living and breathing the markets. I loved learning about bonds. But when I started trading, I realized that there wasn't a lot of use of technology. I understand that in fixed income markets, it's an over-the-counter marketplace, so it's a little bit more opaque. Maybe liquidity isn't the same as, call it, the equity markets. But I couldn't understand why no one was using technology to do very basic operational things or compliance-oriented things to speed up their workflow. So my generation grew up with the iPhone, right? So I think the iPhone came out in 2007. Someone may need to check me on that. But my generation embraced technology. We used technology in everything that we did. But when it came to trading investment-grade corporate bonds in the US for BlackRock, we weren't using a lot of it to do manual processes. So just the booking of trades, right? So just, I called my best relationship dealer. I'm trading a large, basket of risk or a large amount of bonds. And I have to sort of process that and manually book that. It was taking me 2.5 to 3 hours a day just doing that, right? And that's not really the way that in this day and age it should be working. So again, this is more than 10 years ago. But I started to search out technological solutions for that. And funny enough, although Tradeweb is very, very big in government bonds, US Treasuries, I actually asked them about whether they could build me something in the corporate bond space to electronically process these voice trades. And they did. And that was their first electronic protocol in the credit space. It was just a voice processing ticket, right? I didn't have to manually input a price or manually do that sort of operational, cumbersome booking that you're talking about if you have bad information. And so I took that 2.5 hours or 2.5 to 3 hours that I was spending on this down to like 5 minutes a day. So you can imagine that type of an influence in terms of efficiency that's only one person, but imagine what that could apply to sort of your institution or your organization. And the funny thing too is I was the youngest trader on the desk at that time, and after I started doing this, every single one of the traders on my desk said, hey, how do you do that? Can you show me how to do that? I want to use that. And all of a sudden there were 20-year, 25-year veteran traders who were using technology in regular sort of day-to-day workflow. So I give you that example because I think it's a really nice analogy to how technology and electronification has very much taken hold in the fixed income marketplace, and I think is going to continue innovating. And maybe we're not obviously at the end. I think innovations just continue to happen. So let's see if this works. Oh, there we go. Doing it for me, thank you. So trends in trading electronification, and we've talked about it a lot on this panel. Why now? Why does it matter? I would argue that in the fixed income space, which I know a lot of this audience is invested in, has always been sort of modernizing. And we talked a little bit about the difference between sort of evolving or evolution versus revolution. It's always been happening in the fixed income space. But fixed income is different than the equity markets. And you probably all know this, but if I want to go trade a Microsoft stock, just a regular stock, there's one sort of stock for Microsoft that I can invest in. And I can do that over over the phone. There's sort of the NBBO, best bid and best offer. It's very liquid. It's very easy to do no matter where I am. But that's the equity market. In the fixed income market, you look at corporate bonds alone in sort of US investment grade and high yield, 45,000 different ISINs. And then, I talk a lot about the US, but if you think about the municipal bonds in the US, that's a million, right? There's too many types of securities, too many types of things that you can invest in. So we're not going to modernize the same way that the equity market is, but it's still going to happen, and it is happening. It's just happening in a different way. So I'll talk a little bit about protocol innovation, what we're doing at Tradeweb, what we really want to discuss with you about what we're doing. But I really like this chart, this top right-hand chart that I have on here. It's from a company in the US called Greenwich Associates. They do a lot of different polling of fixed income participants, market participants, mainly investment managers, traders, and they ask questions around what are you doing electronically or how much is being traded electronically. You can see in 2021, of the 700 different firms that they polled, and this is global, 45.9% of the volume of their secondary trades are being done electronically.
But Iseult, that also means that 55% is still not done electronically.
Absolutely. And I mentioned that as well, but I do think we may not ever hit the same type of electronification that other equity markets or very, very liquid marketplaces see. We may not see that. And you can see that in the second slide as well. There's different sort of asset classes in terms of electronification in the asset classes, right? In the fixed income world. FX, very electronic. Mortgage-backed securities, very electronic. Some government bonds, and then you get a little bit lower as you go to corporate bonds and municipal bonds, and
Yeah, and I think this is what it goes back to my first comment to Charlie, was that when I started looking at this myself back, say, 15 plus years ago, things really haven't moved until now. And yeah, there's of course many more trades being done electronically, but we're still more than half of the secondary market of global capital markets is traded via the phone.
Yeah.
Is astounding to me, right? I mean, we talk about the amount of capital that is locked in double entry, or everybody has to type in a cash flow, and also, and it is us here in this room. This is a call to action. Saying we need to get this to 90%, right? Because this is where we can use that capital for something much better than for sure trapped in systems. So I'm astounded. I'm definitely the trends I'm looking for to hear about is said Éric is working on blockchaining the bond market, which I think sounds like a great innovation. So where's Tradeweb helping us go from the plumbing? We have blockchain. Let's get this line to go north quickly.
Yeah, and that's actually really very much what we want to talk to you about. I think for a lot of people, though, it is surprising just to see that 45% of the market is being traded electronically, because I think many people here may still, engage in the market, look at investments, and actually trade them in a way that is still a way that we had done that 10 years ago. But so what we're doing at Tradeweb, let's see if this works. Whoever's controlling it, can we flip to the next one? Maybe not.
Someone has the clicker?
Whoever has the clicker. So what we're doing at Tradeweb, and what I think is the most important thing in terms of market structure evolution, is innovation in electronic trading protocols, right? So on the right-hand side of this slide, I actually show what we've done at Tradeweb in terms of innovative protocols. An electronic protocol is just a technological way to trade. So instead of doing these trades manually, like I described in the beginning, you can do them in a sort of electronic fashion. Many of these you've likely heard of. An RFQ, you can do that on other sort of electronic trading platforms that maybe you have traded in that way before. That was our first one that we did with US Treasuries in 1998. But there's a multitude of other innovative things that have come about in the electronic space. So request for market, RFM, session-based trading, where people come together at one point in time and sort of trade things at a particular mid-price. There's A2A in the corporate bond market, where you can actually garner liquidity with counterparties that you don't even know. Counterparties that may want to do the opposing trade that you're doing, but it's a buy-side counterparty, or it's a counterparty in an entirely different region. And then the last one is portfolio trading, which is this brand new concept that's only about 4 years old, where you can actually collect thousands upon thousands of bonds and line items and package this together and do it in a sort of all or none fashion with one dealer at one point in time. It's very much like equity package sort of trading, but it's within the corporate bond space. And that's also going to come, obviously, to the rate space. So all of these innovations have allowed for, evolution in market structure, changing liquidity, getting liquidity in ways that you didn't necessarily knew was possible. And the nice thing about Tradeweb, and actually one of the reasons I wanted to come to this company, is because they create trading solutions across the entire trade lifecycle. No matter who you are within that lifecycle, whether you're a portfolio manager or a research analyst who is looking at an investment but doesn't necessarily know the execution, all the way to sort of the post-trade, which we've talked a lot about, this operational, cumbersome process. Tradeweb creates solutions for every type of trade and every type of trader, which involves things like AIX, which is our automation engine, being able to say with these low-touch trades that don't need a lot of involvement of a human trader, I only want to execute this trade if this, and this sort of parameter happens. And all of these innovations actually have been led by clients. They haven't been led by us. So our best asset at Tradeweb is actually our clients, because the best ideas around workflow come actually from you guys, and that's, I think, why we're very excited to be here. And I know, go ahead.
Yeah, because I think we're coming towards the end, and I want to give the audience some time as well. But I think you're making an incredibly important point. So we have from Charlie heard about the plumbing, about how to actually fundamentally change the world that we all operate in, right? The securities markets and so on. And why? Because there's so much, capital trapped in this and too many errors and whatnot. We can be smarter, better. There's some next steps I think very important to touch upon as well. We hear from Éric about how a bond issuer is working to basically do instant settlement of bond issuances, where all the possibilities come from that. And we hear from Tradeweb about how secondary market is being facilitated. So bringing that together is, as I said, the future is here, but we also have an incredibly long way to go still, because more than half of the market is still not being traded like this. So this is where I want to invite you, the audience, to ask the panel here about, talk a little bit about, how are you yourselves getting into this, and why aren't this 100%? Why isn't this 100%? And maybe have some poignant questions about what this is. And of course, I'm sure maybe everyone is there's someone is sitting here thinking, what is the climate change cost of all this electronification we're talking about? And I'm sure I can tell you they all have extremely poignant answers to that. But I wonder if anyone here in the audience has a question for the panel. Darren.
Hi, I'm Darren Stipe from AIB. The thought I had was a question around being an issuer or an investor as an end user. How do I know that I can invest in a new technology with confidence, since there is such a commitment in time and resources? Should I be waiting for some type of convergence, or where do I reach the point where it makes sense for me in that respect?
Do you mean in opposition to buying it the traditional way?
If I'm adopting a new technology that is one that is meant to lead to the efficiencies that we're talking about here today, when do I know that I can adopt a technology with confidence? I think there's a wide variety of technologies in play. Which one gives me the best bang for my buck? As I say, should I be waiting for a convergence? Should I be waiting for a market leader who really emerges as the one solution that does it for me? Or how do I know when to act?
As I ask my panelists to volunteer and answer for this, I reminded what Iseult said about the generational changes that take place about consumer finance and consumer technology, that it seems that when we are faced as a consumer with having a new technology, we seem to not necessarily have those same qualms as to whether we should or shouldn't, or whether we should line up different apps before we choose which app we do. No, we take the apps as they come. So with that, I wonder if there's anyone in the panel who wants to volunteer. Well, Charlie, you look like you want to answer.
It's an incredibly good question, and people fall into the categories of, do I want to be a fast follower? Do I want to put my head up there and things? And I think it's, fortunately, there is a very broad spread of people that we talk to, people that want to be pioneers. I mean, Eric and EIB are huge pioneers as a major institution in saying, we're going to take a lead, we're going to look at these markets. And every organization is going to have to make that decision as to whether they want to shape the future or they just want to follow what other people decide. What I can say is that the technologies that we're developing, unlike consumer, you can launch an app and we can all download an app and be using it in 2 minutes. Sadly, when you're selling software that's going to be applied in highly regulated markets, used by huge financial institutions, we basically have to build incredibly robust industrial-grade technology before anyone's paid us a cent. So I've been doing this for 4 years. We've done 3 fundraisers, and we're about to go live on our main product. So we've had to spend an awful lot of money, and we started off with 3 things that we knew we had to get right. We had to understand the markets, and that we have because some of us were involved in them for a long time. We had to have incredibly robust technology which works, which is fast, it's resilient, and meets the standards of those required. And importantly, we had to be sure that what we were doing absolutely met the legal and regulatory requirements as they exist today, not tomorrow, not when some legislation's been changed, but today, and that everyone can buy and sell things or use them with complete confidence. So I think the decision today, Darren, to answer your question is whether you want to be a follower or a leader. There are going to be multiple technologies which will work. There isn't just going to be one. It isn't going to be a single one giant company that's going to do everything. Everybody's working hard to collaborate, to allow interoperability between different platforms. But we need people on my side of the fence who are willing to move now, help shape the future, and bring about these efficiencies. If we leave it to everyone else to do it, then companies like mine will go out of business, and we'll still be having this same platform in 10 years' time, talking about the same stuff.
Yeah, and I think that's the call to action from here. And my objective of hosting this panel was to create a sense of urgency about the future being here already, that the technologies exist and that they happen, and that basically if you're not participating, I mean, I think you're missing out. And I think that everyone here, as I said, either investors or bond issuers or regulators, market participants, and a lot of people in the industry that are there. I mean, I think the call to action to say we know there's a lot of good reasons for why we should do this. So let's all go back and take a look at our institutions and say, what can we do more to accelerate this trend? Ika, I'm mindful of time. We started late, so don't. That was this. I'm sorry, but thank you everyone for listening to this. Thank you to my distinguished panelists, to Charlie, to Éric, and to Iseult for talking us through. I hope the objective of a call to action, creating a sense of urgency around technology and that the future is here, has been achieved. It is, I think, a coffee break, and of course we're extremely happy and passionate about this, so that we can talk more over coffee if you like. Thank you all, and thank you to the panel. Oh.
The other two speakers are